All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos, founder of GAR. It's January 18th, 2020. Thank you so much for taking the time to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. Bottom right-hand corner of your screen is a black logo, our logo. Click on that to notifications, subscribe to our channel, hit that like button, get the thumbs up. So I'm just charging all my little devices before the day started. Let's go ahead and get started. Dow futures up 37 points, Nasdaq up 0.55%, S&P up 0.3%, up 0.41. We have some data points in, PPI and retail. That data, feel free to it is free at GAR Capital. We'll always post information we find full and important to you. Real this morning on I went over the chart. Obviously, that's a lot of sense. So some of the data may be a little minutes old. Right when futures are up, Dow futures went down. So I mean, take that with a grain of salt. Do the video because it's on the real-time data. Crude oil up 57 a barrel. Obviously, the dollar is. I tweeted that as well. Gasoline futures up 1. Gold futures up 7%, 19.23 an ounce. So futures up 1%, 24.32. Let me tell these. Hold on. Let's do. Okay. This sucks. Tossing. Let me go ahead and turn off my Bluetooth. There you go. Tripod's tossing that. All right, guys. Can you hear me now? Sorry about that. Good morning. I don't understand why the AirPods like to mess up on me or OBS likes to mess with me. Whatever. I'll just do it with the speaker here. Much better. Good morning. I'll start from the top. Good morning, everyone. It's January 18th, 2023 on a Wednesday. My name is Carlos Garcia, founder and CEO of GAR Capital. Luckily, I didn't talk too much before my mic and my AirPods didn't crap the bed, let's just say. I did do a reel this morning regarding the data points that came out, PPI and retail sales. If you want to go and take a look at that, that's on GAR Capital Instagram. If you're just the type of person to read, we posted that on Twitter as well. All the details that you need, that's free at GAR Capital on Twitter. Feel free to take a look. Feel free to follow us. That's where we tweet all the pertinent information in regards to the market. And sometimes I'll talk sports once in a while. All right, so with that being said, let's go around the horn one more time. Dow futures up about 25 points. I did the video this morning. And again, the data points kind of flipped because we did go a little higher this morning on S&P futures, right around 40, 35 or so, and then we rejected. But with that being said, again, Nasdaq up 0.54%. I have some QQQ calls running. S&P 0.33%. Russell up 0.41%. Crude oil continues to go higher. Look at the dollar, 101.83. Starting to get close, guys, to that 100 level. Very, very key. Gasoline futures 1.32%. Gold futures up 0.75%, 19.24 an ounce. We talked about that 2,000 level. Again, commodities are going to go higher with the dollar going down. Copper futures up 2.5%. Again, that's something that we want to see if we're starting to see some expansion. What's really standing out to me this morning is bond yields. So our bonds, bond futures are starting to break out. You can see it here. Let's go to the chart. I talked about this morning on the reel as well, and we'll go to the daily, and you could see this blue line here is just open interest. Let me go ahead and remove that so we don't get confused. And you can see the daily chart. We're starting to test that resistance that we had back in December. That was the last previous peak where we rejected that trend line on S&P. We're starting to break above it now. You're starting to see it. 124 is your 200 MA. If we break above that, yields are going to start coming down. How about this? One more piece of information that has not been talked about. Where is this thing? Mortgage applications were up today. 27.9% increase in mortgage applications as of January 13th. The previous was 1.2%, almost 27-fold to the upside in terms of mortgage applications. Lowering bond yields, guys, this is what we want. Again, we know that inflation peaked last year. We know that. We've talked about that. Now we're starting to really see some deflation, and again, the market is doing the Fed's job for it. So again, I still say 25 and pause in February 1st. We said that back in December on the newsletter. We knew what they were saying. We knew their cards. They were saying, yeah, you know, we'll do 50 this time in December. Why not just do 75? You didn't have a January meeting. Again, I like to see what they do, not what they're saying. Again, always pay attention to actions more than words. So again, their words can say this and that, the other, but I think the market's doing the job for them. We're starting to get a little higher here, 40.27 on S&P. Bond yields are starting to move. Bond prices are starting to move higher. Remember, bond prices move inverse of yields. So again, bond prices go up, yields go down. The good news, if yields are going down, mortgage rates go down as well. That's going to help the real estate section of the economy. And again, that dollar is really leading us down where we want to go. You're starting to see that pop here on the S&P. Can we get to that 40-40 level? Again, that 40-40 level is that 50 MA on the weekly. Look at it here. I think with regards to trading, again, you still need to get above that level. Once you do, we need to settle above 40-40. Settle above the trend line. Not a wick. We don't need a wick. We need a settlement above the trend line, and then we could start looking at where the possible next legs up, probably 42.03 on the weekly. But if we go to the daily, again, that 50 MA, we know it's 40-40. We need to settle above that. So let's call it 40-40, 40-45. If we can close above there today, that gives us a lot of juice to probably get back to this upward channel that we broke before towards the tail end of December. Technically, we did have a Santa rally, not as a Santa rally as we expected, but we technically did. But again, 40-40, that's the number that needs to be on your mind. We're at 40.28 currently. Take a look at the euro dollar. Again, that's something that we've been talking about for a minute now. Let's see, euro dollar broke above that daily trend line. Perfect. That's exactly it. It's nice when things are working out exactly the way you're expecting it. Next target around 111.54. Again, if you're long on euro dollar. The big news overnight was the dollar yen. BOJ met yesterday. They did not increase rates, even though they had an opportunity to do so, and they did not. So what happened was that we got a pop in the dollar and then a fade. 126.56. We talked about that support. Didn't we say clearly on the video on Instagram that the yields are following the yen? If the yen gets stronger, yields are going to fall according to the correlation that we found. So again, keep that in mind as we get to that 126.56 level. What does that help us out with TNX? Oh yeah, do we have a little more room to go? Sure. Can we fill this gap here on 3.143? Oh yeah. But again, we need that dollar to continue to go lower. Pound dollar, 123 pips to the upside. Thank you, dollar, 124.08. Even Bitcoin futures are turning green, 21,650. I said above 20,000. That seems to be that level where people start getting a little bit excited on Bitcoin again, where they don't have that pure oversold RSI fear. Now we're starting to move a little bit towards that greed side. So when it comes to the market now, and this is very, very important, guys, let's go to the S&P. Now, again, I still think we go higher. That's just me. I still think that we hit a bottom. I think we hit the bottom back in October, obviously. But here is an opportunity that I talked about in August on the morning note, that if you wanted to get out of some stocks that you did not want to own anymore, some of the high betas that you said, let me just get out, now is the time to sell, if that's the case. If you need the money within 5 years, or let's just say 3, get rid of it. Just sell it. If you're the type of person where you're just like, man, I don't care, I can handle the portfolio swings, you're holding here because you're probably going to get rewarded very, very soon. 42.44 would be a very nice target, and maybe the summer target. The only issue I have is that if we do settle above this trend line and continue to go higher, it's going to get overbought very, very quickly. We don't want volatility to the upside either. We want a slow, nice, continuous pace to create a trend that we can actually sustain. For example, this here. We want this sustainability. We don't want just this all the way up to 45 or 44 and then reject. That's going to be tough. What we want is just to get back to around this trend line here, step at a time, settle above there with a close, and then we could stay above here, get around to 41.55. Maybe that'll be our next subsection or target. We'll use 40.40 as support moving forward, and then we could see if we can get back to this, this ascending channel. But that's really what we're looking at for the most part. The most important thing that's really saying the most to me is the dollar. And again, You're starting to get to that June support, guys. We talked about that yesterday. If that does break, 100 is coming, and it will break as well. That means stocks will go higher. But it was just a pretty choppy day yesterday for the most part. We did catch Apple calls. I think I caught like 65% on that. I held that a little bit. But again, I have some value names I got rotated out. Hopefully value gets some bid today and we can catch those. But again, it is a short week, pretty choppy. But again, the PPI was very solid. That's exactly what we wanted to see. In regards to PPI, 6.2% year over year. The expectation was 6.8%. How about month over month? That was actually a negative. So again, some deflation there. Let me see if I can bring this up. Retail sales were down 1.1%. Again, this is what the Fed wants. But again, in terms of month over month actual PPI, producer price index, what it costs to make goods is negative 0.5% versus the forecast of 0.1% in the negative. That's deflation right there. That's not falling inflation. That's deflation. Now we're starting to accelerate to deflation. So as we accelerate to deflation, what does the Fed do? I expect a 25 and pause. If we continue to have prices continue to go down, again, that is very deflationary. That is usually recessionary. You already know, guys, this is the deal. The Fed is going to cut, man. It always has and always has been. And again, I just find it interesting that for the first time ever, people are listening to the Fed when they've got it wrong every time. And that's fine. The market is doing the Fed's job for them, in my opinion. So if the dollar continues to go down, commodities are going to go up. That's expansionary. Copper, for example. And if interest rates go down, that's expansionary. That's helping consumers to refinance. If we can kind of somehow break that 5%, kind of that floor, that 5% floor on a 30-year fixed rate mortgage, think that we're going to start seeing a lot more love in the real estate sector. But that's what I see, at least with the macro today. All right, good morning. Sorry, Brano. It's the AirPods. Fuck the AirPods, man. Problem with the mic. I apologize again. God, it's the worst. So I'm using the actual microphone from the iMac. So again, forget the AirPods. I hope this works for everybody. Do you think oil companies like MRO will go up with the price of oil? Yeah. Again, if oil goes up, oil companies are going to go higher. And you can see it's up about 0.2%. In terms of edge on MRO, is this marathon oil, you're probably looking at maybe 25 or so for support. But there's a gap to fill here at 23.02. Maybe that's the level you're looking for to add some more. I still don't think it's an investable market quite yet. I still think it's a tradable market, but not an investable one yet. If you're doing a DCA, your dollar cost averaging, none of this matters. I had to pause my dollar cost averaging on my SPY-G, prepping for tax season. It's a new year, got to get a bunch of stuff together. But again, I'll get that back as soon as I can in terms of getting the plan the way I always have it. And then I also have my IRA to contribute to all that shit. So again, you have tons of different things that you could start setting yourself up in terms of investing, whether it's your IRA, maybe you have a Roth IRA, traditional IRA, SEP IRA, or you want to go ahead and actually start your DCA now as we start into 2023. I just don't think it's a time to just start picking and choosing just quite yet. We're just not there. I think that once we get a clear trend breakout, again, we may not have caught it exactly in terms of, oh, buy here. And again, I was dollar cost averaging during the bottom of October 11th, which I consider a bottom. But I wouldn't go crazy here quite yet. Again, you're starting to see a lot of people looking at that trend line that we're looking at too. Could it reject? Absolutely. Just protect yourselves. But what I'm seeing here is that we're seeing the rotation into high betas. And we're seeing rotation into tech. Why is that? 10-year yields. If the 10-year yield and the dollar continue to fall, tech will rotate in and get some love. Watch out for value. A lot of the names that have been extended. Caterpillar that has hit new 52-week highs. Boeing that's actually been on fire. Again, let's go ahead and PepsiCo. Again, those names are starting to be rotated out while people, as rates are going lower, as traders are seeing the rates and dollar going lower, we're going to want to get some higher yielding assets like a high beta. You saw AMC yesterday. AMC was up, what, 17% on the day. Bed Bath & Beyond, the last couple of weeks was up 50-something%. Carvana was up. I mean, it's a little wild because money is chasing yield, and that's the key. So again, if we're seeing interest rates go down, if people are buying bonds, they're locking in their rates now, understanding that rates will probably continue to go lower in the future. Look at the dollar, absolutely tanking now, down 0.75%. Now you're probably thinking tanking, I've seen, those days where we had circuit breakers. The dollar is not supposed to move 2-3% in a day. It doesn't work that way. But 0.75, that's pretty big as we're starting to get to the journey of 100. Sorry if you guys went over this, but QQQ gaps to fill. Do you see running up, or could you fill the gap at the market open? Okay, so I do have QQQ calls for this week. So let's go ahead and take a look at it. And again, on the hourly, it's absolutely beautiful. Breakout on the hourly, what more could you say? So we went ahead and goodbye the daily. And now we're trading at 283.44. Really what we're looking for now is the retest of 285, which is that trend line. That's kind of the target. I think we're going to get Qs this morning and just get out. There's not a gap on the daily per se, but what we are using is this 100-day moving average, the blue line, as kind of our jumping point as support. When again, we retested it slightly, that was our daily chart yesterday. We held, which is nice, and we held that 61.8 fib, and I did the Fibonacci retracements from the top since October, since the low of October as well. So again, you could see that in December, that we went ahead and hit 1213. We hit that top there at 296.65 and the low at 254.26. You do the Fibonacci retracements levels right there. And again, right now you're at the 61.8. We're using that as support. We're using the 100-day moving average as kind of our pivot to get to 285, which would be that trend line. And again, of course, that could reverse. That could reject there and reverse back down to 280. So again, if we can get above what are we at? 283.40. Wow, we're probably going to get it this morning. Awesome. So I'm going to catch QQQ this morning if I get a chance to, because that's a nice trade. Wow, 283.439. Well done. Nasdaq starting to move. The reason why is the 10-year and the dollar. Will they ever get back to all-time highs? Are you talking about ARK? Here's the problem with ARKK. ARKK trades. It's not just one stock. It's not just a basket of stocks like an ETF. They trade every day. So trying to say, are they going to get to all-time highs? Well, that depends on what the hell they're buying today, because it seems that it changes every day. So what I think it'll get to all-time highs, you need to get interest rates really, really low. We need to start getting to cutting. And then we could possibly talk about 73. All-time highs, remember guys, it took Cisco about 20 years to get back to their dot-com peak. Who knows if ARKK is even going to last up to 20 years. But again, all they need to get it is maybe a couple of handful of names right in the right scenario, in the right situation, like in 2020. That could happen. Do I think it's viable or likely? No, I don't. I don't think ARKK will hit an all-time high. I think it'll retrace some losses. I think at the peak, it'll probably get to 110. If that's the case, and then that'll probably be an opportunity to sell if you wanted to. But again, guys, ARKK trades their own way. They buy and sell every day. It's not like an ETF where we can kind of look at, oh, if they have 5 names that's their building block, and if their stocks go up, they're going to go to all-time highs. That's not the case. They keep changing stuff every day. They're kind of chasing their own. They're kind of chasing yield as well. So it's a trading ETF in a sense. They keep changing it all the time. But let's go ahead and take a look about ETFs. One more. This is RSP. This is the equal weight S&P 500 ETF, now trading at 149.69.67. That is slightly above that key trend line. Again, if we took all 500 S&P 500 stocks, made them equal weight, doesn't matter how big Apple is, doesn't matter how big Google is, doesn't matter how big Amazon is or Tesla, whoever. All 500 are equal, and we're breaking out. That right there is telling you all you need to know. That's telling you that, hey, the appetite for risk is back, because interest rates are going down. Bonds are being bought, adding liquidity to the system, very, very important. And of course, the dollar coming down, thankfully giving commodities a boost. Sorry if you're traveling to Europe or South America anytime soon. You kind of miss the fun of having a strong dollar, if that's the case. Calls I'm looking into. Well, I do have QQQ. I'll probably take that in the morning. I still have some Boeing calls, and I still have, I think I have Boeing and I have JPM. So Boeing is up pre-market 212.70. Let's see if we get a boost with lowering yields. Again, the only thing I worry about is we're getting a rotation out. JPM after yesterday's move, again, they're pretty flat today, down about $1. The premiums were absolutely crushed, so that's probably going to be an L. We were looking for a continuation to 144. It completely rejected. Thanks, Goldman Sachs, but that's where we are, and they're kind of lumped in together, the banks. So in terms of calls I'm looking to, remember, it's a short week, so I'm probably looking back for next week. I like Microsoft here. I think Microsoft, if we can get above 245, may be an opportunity to go long. And it's been a tough one, but again, if we get above, actually 242.77, we're kind of close to that. If we can get and use that 100-day moving average as a jump off point, we could probably take a look at the 250s for next week and give us a little bit of opportunity. Earnings are coming, so I need to check the calendar and make sure that we don't have any kind of IV increase because Microsoft reports next week or something. But I'll take a look at what's reporting this upcoming next week. And then we have the Fed on the 1st. We have a couple of gaps to fill to the upside. This one was filled already. And then you have this one here at 285.47. I'm pretty certain that that will fill. The question is when. It may not even be this year, for example, but it will fill on Microsoft. But again, in terms of calls, I think Microsoft stands out to me. I did miss Tesla because I already caught Apple and I didn't want to go too heavy on tech in terms of the market. Nice move on the hourly, starting to get close to resistance right around 140. If 140, 141 breaks, you can start taking a look at the 150s as your next resistance, possibly. And we know how Tesla is very, very volatile. So again, just take that with a grain of salt. Microsoft is laying off 10K employees, and that makes the stock go up because it's less labor costs and bottom line costs, helps boost EPS. The dollar does help Microsoft because they do business overseas. They get foreign currency. They have to change that into dollars. If the dollar is too strong, that helps them lose money on the bottom line. So again, a lot of the macro still matters in terms of these corporate earnings. Again, a weakening dollar, weakening producer price index are tailwinds for the market, not headwinds. Do I say the worst is over? At least in the inflation front, inflation has been over since June. So again, this is nothing new. The question is now everyone is starting to see it, which is good. And we're starting to get accelerated lowering prices. So, you know, we could talk about this stuff all day, but at the end of the day, we still have to see how the market reacts. The market knows all, and the market's never wrong. So let's see what we get. Discord members, if you have QQQ this morning, let's go ahead and get a quick ask price, 230, 283.45. I'll go ahead and let you guys know on Discord to catch that, take it if you see it, and have a great morning. I got tons of stuff still left to do. I know the top 10 stocks of 2023 still hasn't been done. We're getting that to you guys. My apologies. I actually took a break yesterday after work. Thank you to my wife for dragging me out to the beach. And again, it was nice to just sit around and just kind of get away from the screens because I look at 3 screens all day with an iPad and a phone. It just gets old, and it's good to get a little bit of a breath. And I feel a lot more refreshed looking at this stuff now. Don't let my eyes fool you. I'm a little more refreshed now. But again, it's good to have a little bit of time away from the screens and just kind of turn off the brain, kind of get into the rhythm of the market. I kind of equate trading really to kind of like playing chess or playing poker. You kind of have that, you know, you get that, not motivation, but you get that momentum. You start feeling some things. You're like, okay, now I know. I kind of see the matrix in a sense. The more you do it, guys, if you're trying to learn how to do this, get the screen time. Really put your eyes on the screen. Really start charting as much as you can. There's no substitution for chart time. You have to get screen time when you're learning this stuff. Again, if you do it half-ass, you're only going to get half-ass results. You got to be really in this all the time. Chess. I suck at chess. I'm a little better poker player, but chess, I'm really bad at. I'm not great at it. But we'll go ahead and leave it there, guys. Have a great rest of your morning. Starting to see a little bit of fade on the S&P 500. Again, 40-40, still kind of, you know, right there. We're trying to see if we can break that. And 283.25, I'll let Discord members know that if you see Qs, you take it. Have a great morning, guys. I think I ran too far for this one. Thank you, Robert. Thank you, Max. Thank you, Young. Thank you, Bruno. Thank you, Anthony, Tanner, Famia, Alex, and Max. Appreciate you guys for following us and joining me in the morning. I will see you guys tomorrow, and we'll talk about it all over again. Have a great day. Cheers.